Hey now, I'm back with another trading strategy review. In this installment of Trader's Landing, I am going to show you a complete trading system based on a classic pullback strategy. Plus, I am going to share with you 6 of my popular optimization tips to squeeze out even more profits. And if watching content like this reminds you of eating a delicious cake, then go ahead and crush that subscribe button.
Nope, not. Oh, yeah.
I call this system pullback to profits, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This strategy uses 3 free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator is the Exponential Moving Average, or EMA. I am going to set the length to 100 and color it in white. The 100 EMA will be used for trend direction confirmation. The second free TradingView indicator is another EMA. This one will be colored in orange and the length will be set to 50. The 50 EMA will be used for setup confirmation. The final study to place on the chart is the 25 EMA. This will be colored in blue. The 25-period exponential moving average will be used for triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar, 5-minute candles. The rules to enter along on pullback to profits are: first, price is trending above the 3 exponential moving averages. Specifically, the 3 EMAs are fanned out in numerical order and not touching price. Second, we are looking for price to pull back into either the 25 or 50 EMAs, which can either be a touch of or a close below the EMA line. Third, price does not close below the 100 EMA, as that can be an indication of a change in the overall trend direction. Finally, price closes back above the 25 EMA in blue. All of that happens on this candle here. That is our trigger candle. We place our stop at the 50 exponential moving average line in orange, and our risk is 1 to 2. And this one hits the target. If you enjoy this content, please make sure to click that like button. I have one more long example. Price is trending above the 3 EMAs. Then we can see price touches the 25 EMA with that nice hammer candle. Third, price does not close below the 200 EMA in white. Finally, we can see that price closes above the 25 EMA. Everything converges on this candle and it serves as our trigger. The stop is placed at the 50 EMA in orange and the risk to reward is 2. And this one rapidly matriculates to the target. Now we flip to shorts. This is what I will test for shorts. First, price is trending below the 3 exponential moving averages. You can see the 3 EMAs are fanned out in order and not touching price. Second, price must pull back into either the 25 or 50 EMA, which can either be a touch or close below the line. Next, make sure that price does not close above the 100 EMA, which could mean a change of the trend. Finally, price closes back below the 25 EMA in blue. All of that happens on this candle here. That is our trigger candle. The stop is placed at the 50 EMA and the target is 1 to 2. And this setup hits the 1 to 2 target. I am going to show you one more quick short example. Price is trending below the 3 EMAs. Price pulls back into the 50 EMA but does not close above the 100 EMA. Then we can see price closes below the 25 EMA. Our confluence is found on this trigger candle. The stop is placed at the 50 EMA and the target is 1 to 2. And this one hits the target. I am going to give you some really fantastic ideas on how to make this system better along with a Trader's Landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do all the required testing and be sure to let our community know what you discover. This test was done on Bitcoin versus the US dollar 5-minute candles. It took a quick 16 days to find the 100 trades. Most winning trades in a row turned out to be 7, and most consecutive losses were an alarming 9. This dataset provided for a 49% win rate with a very nice 1.92 profit factor. Risking 2% per trade, this system produced a gross gain of 94%, and I am going to show you 6 tips on how we can make this system more versatile and profitable. The equity curve is comprised of 3 impulsive moves with 2 extended drawdowns. Taking all the trades from the 5-minute chart and overlaying them on the 1-hour chart, one can clearly see how this chart mimics the equity curve. One may conclude this system is extremely dependent on trending conditions and does not fare well during consolidation. What score would you give this strategy? Let me know in the comments below. I give this system a Trader's Landing score of 7. Because while this system gets you into a trend in a very clear and simple way, these results could be extremely misleading because of higher timeframe market conditions. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. A great way to mitigate losses during consolidation is to change the EMA timeframe resolution. Look at this chart where changing the 25, 50, and 100 EMAs from the current timeframe to the 15-minute time frame would have allowed you to disqualify this cohort of bad setups. It is always a good idea to somehow incorporate higher time frames into your trading system. Second, like I showed in this video where I use the ATR bands to set the stop loss levels, by adding the same SL method to this system, many losses could have been avoided like this one. Next, on this chart, you can see this series of losing setups could have been filtered if you were to wait for price to trade below all of the EMAs before taking additional setups. And on this chart, you can see a set of bad long entries. Fourth, looking at this chart, you can see that moving the stop to break even after 1-to-1 is hit would have saved this trade. When trading a trend following system, you want to look for places where there is opportunity to mitigate risk. On this chart, you could look to eliminate your risk once this top is reached. Obvious places of market structure are obvious places to preserve your capital. Furthermore, adding price action to key levels can really help your gains. Look at this chart where we get multiple wicks on the same MAs followed by a trend continuation. Or on this mode of move, we observe the same thing. Adding price action to key levels can be a powerful addition to your trading system. Furthermore, akin to the way I trade, you can wait for a trendline break of a pullback. On this chart, price pulls back into the 100 EMA, creating a channel. Then price breaks the channel. The market then rejects this key level and a very nice trigger candle appears. This is followed by the expected trend continuation. And we can see the same thing on this chart, taking a little more time to develop after the channel break, a retest of the 25 EMA, and a nice green trigger candle. Put volume on that, and oh baby, is that a nice setup. Check out this playlist for more profitable systems, and have a great day, because you deserve it.